Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 23rd of February 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. Now, jumping into the charts. So the first one I want to pick up here is the Shanghai Composite, and the index, well, I mean, it's closed now, and it closed fractionally in the red, guys. So the most important is that it drifted back below this hurdle, this 3,637 territory that I kept talking about, and that's the highest point of January. Initially we saw the index trading above this area, but as you can see, the bulls kind of gave away their positions, and the bears took those positions and managed to drive the index a little bit lower. So in a way, this of course kind of raises a few concerns here in the short run, of course, because again, overall we're still trading above this upside line drawn from the low of the 19th of March. So in a way, we could see this move right now as a temporary correction. So for example, we could see this index drifting a little bit maybe to the downside here, testing this territory, the 3,587. Around here we have the 21-day EMA shown as the yellow line, which also could provide a bit of support. But to be honest, even if that fails to hold, still the kind of the last chance here for the bulls to step in could be near this upside line. So in a way, all this territory here could be considered as a corrective territory. So yeah. For now, let's see how this is going to play out. In case the index decides to reverse instead of like moving towards the 21-day EMA, and if it starts climbing back above this 3,637 territory, and or even let's say if it pushes above this 3,000, or actually let me just adjust this level. This is probably no longer valid, not probably, but no longer valid for the upside. What we could stick to is the high of today. So, and that's at 3,672 mark. Now, this probably would be a little bit on the better side. So a nice good push back above the today's high. Yep, near the 3,672 could do the trick maybe for more buyers. Of course, don't get me wrong, we still would have a bunch of resistance areas here to overcome. But if we then push above the 3,731 territory, somewhere around here, now that's where it could become a little bit even more, or it's not a little bit, but even more interesting for more buyers. Jumping into Hong Kong's Hung-Seng index, as you can see, the index is still trading in the positive territory, so in a way kind of working out well here, and to be honest, working out well with this idea that I've mentioned recently. So the idea was that in a way we could see a bit of a corrective move here lower, maybe a test of this highlighted area near which is the highest point of January, near the 30,191, and if all this area provides good support, we could see a nice rebound. So this is what we got exactly. I mean, this is where the price kind of managed to test that area and then rebounded from it. So for now, to be honest, I'm going to stick to a little bit more towards the upside, unless this short-term upside line drawn from the low of the 29th of January gets broken. Nevertheless, I mean, even if it gets broken, yes, we'll go for slightly lower areas, but we do have another upside line here which could provide some support, and of course then we'll go slowly here. If it continues to drift lower, then yes, we'll go step by step, because we do have a bunch of upside lines here which kind of could play out nicely. So yeah, for now, as a long story short, in a way, keep your eyes on this. Excuse me. Keep your eyes on this little short-term upside line, tentative, of course, but nevertheless an upside line. And keep your eyes on the current highest point of February near the 31,183 zone. And yep, if that gets broken, then higher levels could be met. Now, German index DAX. Yesterday, initially it pushed lower, but that by the end of the day, the index reversed. It ended the trading session above the 21-day EMA and above this 13,917 zone. So looking at this, I mean, there is a good chance we could see a further move higher here. We'll be very careful with this, of course, because, for example, looking at the cash index right now, we can see that the price is trading near the 13,959 zone. Still not far from that psychological 14,000 zone, but still below it. So that's why we're going to be very careful. I mean, also we're still trading below this downside line drawn from the high of the 8th of February. So in a way, everything's kind of, let's say, everything's kind of difficult still, I would say, because yes, if we do get a push above the 14,026 zone, yes, we will go for some higher levels. We'll aim for this downside line, but as you can see, I mean, there are a bunch of resistance areas that could hold the acceleration, could halt the acceleration, and well, we could then maybe see a reversal back down. So long story short, basically for now, what I'm going to do here is just going to slowly aim for some higher levels, but again, keep my eyes on these barriers here on the upside here, and then we'll take it from there. Now jumping into DXY, another index, and this one's the dollar index, and yep, we've managed to drop below this 90.25 zone. I've mentioned this before, guys, and so I've mentioned this several times, that in order to go for some lower areas, we need that daily candle staying below this 90.25 zone. As you can see, we did get that, and now basically we're resting near this other level that I spoke about. This was my other target after the 90.25, and my other target was this 89.96 zone. And just to remind you what that level was in the past, and let me just scroll back here, well back into history. And this is this little the high of the 12th of April of 2018, yep, that's the little area where currently DXY is getting a hold up. Let's see if we can push further south. I mean, this will be quite interesting, I would say, because if we do get a drop below this 89.96 zone, then yes, of course, I will start aiming for the lowest point of January near the 89.23 zone, and then we'll take it from there. For the upside, now this upside line here needs to be redrawn and reused, and let me just quickly double check if this is going to work or not. So no, not really. I mean, this is not an ideal one. It's still very tentative, so probably I'm going to stick to this downside line right here, the short-term tentative downside resistance line drawn from the high of the 5th of February. Now, if this gets broken and the price starts climbing higher, and previously I talked about this 91.24 zone, but now, to be honest, what I'm going to look at here is I'm going to look at this high, the high of last week. I think it's the high of last week near the 90.95 level, or sorry, not 90.95, but this one right here, 91.05 level. There we go. So a nice push above this could, yep, open the door towards some higher levels, and then we'll take it from there, guys. But that's, of course, for the upside. We still would need to overcome this downside line first, and then, yes, push above this 91.05. For now, everything's leaning a little bit more towards the downside here on DXY, especially if we get a drop below the 89.96 territory. Good morning to you, Kirsten, too. I can see there's some comments in the chat. Yep, good morning to you, too. I hope you're having a wonderful Tuesday morning. Jumping back into the charts here, gold, for example, is enjoying the weaker dollar, as we can see. So everything's kind of so far working out according to the plan that I've talked about yesterday. And if you remember yesterday, I said to you guys that in a way what I'm considering here maybe is a possible kind of move higher here, maybe even a move back towards the 200-day EMA or even this downside line. So far, I mean, everything's kind of working out nicely and interestingly, and so far according to the plan. Let's see if this 200-day EMA near the 1819 level will provide resistance or not, because at the moment, I mean, yes, it seems that we could see more upside, but again, be very careful near these levels here, near the 200-day EMA, near this downside line, because if these hold, then yep, another slide could be possible. So keep that in mind. For us to get a little bit more excited with the upside, well, I would need to see at least a push above this downside line, and then we'll take it from there, guys. We'll reevaluate everything, and then we'll see if gold is willing to kind of push further north or not. But again, for now, it is how it is. We're still below this downside line, drawn from the high of the 7th of August, so there is still a chance for the bears to step in. Now, Ethereum. Okay, so, wow, I mean, look at this madness here. I mean, I don't know if this is a trustworthy wick here to consider, because, again, this is, I think it's a bit of, yeah, something's not right here. I mean, nevertheless, we'll stick to the main price action here, but the fact stays the fact that yesterday the crypto started declining and drifted from this after testing the psychological 2000 territory during the weekend. On Monday, the crypto was already lower, below that 2000 territory, and yep, it's sold off heavily and continues to drift lower. Now, my previous idea was that if this upside line does continue to provide support, and this one's taken from the low of the 23rd of December, if this continues to provide support, then yes, we could see a nice a rebound here and a push higher. Now, we are getting a few of these overshoots right now, but if by any chance it climbs back above this upside line and stays here today, then yes, I'll consider this idea with a possible move higher. But if the crypto here today remains and closes the daily candle or ends the daily candle below this 1595 territory right here, now that's where it could become very interesting for more sellers, guys. So keep that in mind. I mean, already, I mean, if you manage to capture this drop, yes, that's wonderful. But this is the point where try not to chase the market, because again, if this comes back and stays above this upside line, I mean, we'll just have ourselves a few nice overshoots here, false breakouts, and then yep, this is where a lot of traders could get caught out. So that's why wait for this one at least, you know, to see if we are going to stay below this hurdle, below this 1595 territory, and if so, then it increases the chances. I mean, don't get me wrong, there's always a chance for this one to actually kind of not to work according to the plan, because, well, that's the market. But yeah, it will increase the chance of potential move further south. So yeah, keep that in mind. For now, it's very interesting, but again, we did have a decent drop already. Can we continue moving lower? Well, let's wait and see here, guys. Litecoin, so drifting, or should I say testing this area, and this is where it's very, very interesting right now, because looking at this picture, the crypto now is balancing near this level that I spoke about previously, this 185.75 territory. You can see that the crypto is now kind of struggling to, let's say, push further below this. If we do get that daily candle drifting below this hurdle and staying below this hurdle, then yes, of course, we'll go for a larger correction to the downside. Now, probably then what I'm going to aim then, I'm going to aim for this upside line drawn from the low of the 11th of December, and this one is right here, yep, then we'll just start targeting this upside line here, basically. Long story short, but again, be very careful at the moment. I mean, if this continues to provide support somehow, we might see a nice rebound and a push back higher. Again, for now, like I said, I know it's a little bit of a tricky one here. I mean, it is kind of leaning a little bit more towards the downside maybe, but we have this key support zone which needs to be overtaken first before kind of we could go for lower areas. AUD-CHF. AUD-CHF is enjoying, or should I say, the bulls are really enjoying this pair right now. I mean, you can see it continued to push higher. However, today we're seeing a bit of a corrective move here lower. Let's see if we can stay here below the current high of today, and that's roughly around the 0.7102 zone. If we can stay below this, then maybe we're ready for a small setback here, a small correction to the downside. But if it pops above this area, above this current high of today, then we'll go for a further move higher. And of course, then I'll just have to scroll back here into history and try to find the next potential target. And probably one of the targets could be this. The high of the this is 0.7166 mark. That's the high of the Yep, that's the high of 7th of May of 2019, guys. So that could be our next target. However, don't get me wrong, we are a little bit maybe overstretched here in the short run, so a bit of a corrective move here could be possible. And what you could do here and how you could look at it is, if you want to be a little bit more on the safe side, keep your eyes on the high of last week, which is roughly around the 0.7057 territory. A nice good drop below this could open the door towards some lower areas. USD-JPY. Now this one is an interesting one, and at the same time very, very tricky. So we're seeing a corrective move lower here, of course the weaker dollar is weighing in on this pair. And now the big question here is, can we get a hold up near this upside line drawn from the low of the 6th of January? Well, let's wait and see, guys, because again, for now, I mean, it's all looking quite interesting. I mean, still there is a bit of positivity left for this pair, because we are still trading above the 21-day EMA, above the 100-day EMA right here, and also above this little short-term upside line. So if all this kind of proves positive here for this pair, we could see a nice rebound. However, I would prefer to maybe wait for a push back above the 105.35 territory right here, which coincides with the 200-day EMA here, and then yep, more buyers could join in. But at the moment, it is how it is, guys. I mean, we have to probably just step back from this one and just continue observing the price action. If the upside line breaks and we see the rate falling below the 104.76, then well, I'll go for some slightly lower areas. GBP USD. So very quick update on this one. Fantastic, spectacular rally on this one. I mean, look at this. It's just pumping higher and not stopping. However, this 1.4097 territory, I spoke about this level. Recently, or should I say actually last week. And let me just show you what that level was in the past. I mean, look at this phenomenal move, and this level is the high of the 4th of April of 2018. So that's where we are currently getting a little hold up. Let's see if this area continues to provide resistance. If so, well, I mean, maybe we could finally get that little correction here to the downside. And I'm assuming that there's a lot of traders who are short or already. I mean, but again, guys, as I mentioned before, be very careful. Wait for that confirmation break signal. And for now, we don't have that, and it just continues to rise. And of course, the weaker dollar is not really helping this pair. So yeah, that's why be very careful for now, guys. But if this 1.4097 territory continues to provide resistance, then maybe we'll go for a little correction to the downside. To be a little bit more on the safe side, if you want to be a little bit more on the safe side, of course, you could wait for a break of this little short-term tentative upside line drawn from the low of the 4th of February here, and then go for a larger correction to the downside. But again, it's your choice, guys, your call. But again, keep your eyes on some of these levels. If we see a drop below the 1.3966 territory, probably that's where I'm gonna get a little bit more excited with a larger correction to the downside. So keep your eyes on that one. And finally, EURUSD. So breaking the so-called neckline, the one that I talked about yesterday. Basically, yesterday I've mentioned to you guys that we could be seeing here a possible inverted head and shoulders pattern. And the moment, I mean, well, I mean, we're very careful here because we didn't really get that strong move to the upside. But for now, it's just kind of flirting with this area, but still looks a little bit more positive than negative, I would say. And if it continues to trade above this 1.2156 territory right here, then yes, I'll still stick to the upside, and I'll aim for these slightly higher levels. And then we'll take it from there, guys. But the moment, I mean, it is, like I said, looking quite positive. But let's see if this pair can stay above this 1.2156 territory. If it cannot, and if it drifts back down, all this area for me will be somewhat of a neutral one. But I'll start looking at some lower areas if we get a drop below this 1.2059 territory right here, or actually 1.2023 territory right here, marked by the low of last week. So again, but long story short, for now, I'm leaning a little bit more towards the upside, guys, especially if the pair stays above this 1.2159 territory right here, which is also kind of considered to be as the neckline. So guys, I'll have to wrap it up here. I really appreciate you joining in and watching this one till the end. Thank you very much, guys, for everything. Thank you for your likes, for your views. I really appreciate that a lot. So I'm really hoping that I hope you found it useful. Once again, or should I say, as always, have a wonderful trading day, guys. Stay safe, and I'll see you later. See you later at my Traders Tea Time, 13:30 GMT. Thank you very much, and bye-bye.